Hey guys, welcome back to my channel. Our weekly analysis is going to be a little bit different this week. We will go through SPY and Tesla and some of the other tickers that I want to watch, but I also asked the community to send over any tickers that they wanted me to look at. That way I can make sure that everybody's getting the help that they need, or they're looking at the charts that they want to review. Because I know I trade tech a lot, so I know we do have some retail tickers on the list today. So it's not going to be a long list, but I do want to just take a look at some different charts and give a little bit of feedback. So let's get into this SPY chart. Right now we're looking at a SPY daily chart, and let's just talk about what's been going on with SPY. So let's zoom in a little bit on the recent movement. So this week on Monday, we had a really nice pullback on SPY. As you can see, Monday's candle is this red candle right here. That's a beautiful reversal candle. The key that a lot of people miss out on is that even though that is a reversal candle, it's sitting right at support. Anytime you have a reversal candle, but it closes right above support. So not only did we have the support of the 400 level on SPY, but we also had that daily 9 EMA. That 9 EMA acted as a launch pad. And as you can see, that candle closed above that support and 9 EMA, and it exploded the next day. The next day, it gave us that bullish engulfing candle off of the 9 EMA. So anytime you see that combo right there alone, that's a beautiful entry for calls, and in this case it would have been swingable, so you could have entered calls at the end of the day Tuesday to swing into Wednesday and Thursday just based off of that combination. So far our 2023 market is looking a lot like 2021. I know I've been saying this all year, but this is becoming more and more of a buy the dip market. As you can see, price opened up this year a little bit choppy, but then it just exploded to the upside. It broke EMAs, it had some friction, the dip was bought. Once that dip was bought, it exploded through our monster trend line, which is here, and it just continued on. Broke 400, retested 400, made a higher low, and exploded. We went all the way to 418. We had a lot of big tech earnings to report last week. We had Apple go crazy on Friday. I think Apple almost had like a $8 or $9 day, which is explosive for Apple. So there was a lot of movement that gave SPY the volume that it needed to move like crazy. Now that big tech earnings is over, we kind of have to figure out where SPY goes from here. So right now, looking at the candle that printed on Friday. So on Friday, we have this candle. Even though it's not red, it definitely shows that sellers stepped in. Sellers stepped in at that 416 to 417 resistance level, and they pushed price down. We closed a little over 412, which is fine. Some levels to watch for sure. 410 is our current support. So what we're going to watch is the fluctuation between 410 and 416-ish. If we get a chance to break below 410 and we close below 410, I would look forward to a retest back to the 407 range. So from 407, I would then look to test 402, which would then give us a test of 400. So that's just some of the SPY levels moving backwards. However, you have to keep in mind that, okay, on this daily chart, these EMAs act as support. These EMAs act as buy signals when we're in a buy the dip type of market. So you want to be sure to keep in mind that these EMAs serve as support, and price can bounce if it tests these levels. So don't ever expect price to just fall right through the EMAs, even though sometimes it does. Don't expect it to be a 100% thing. So watch your levels on SPY. It could be a choppy way down. However, that 418 level is definitely a tough level for it to break. Going back to what we were talking about last week, we do have an open gap at 421. So we do have that on our radar. Will SPY go to 421 and close that gap this week? We don't know per se. It's something to watch. There's always a lot of upside and a lot of downside movement for SPY. Even on these days this week, we had a lot of scalp opportunities. So even though our analysis is done on a daily chart, always go down to your 1 hour, go down to your 15-minute chart to kind of get in there and get some of those quicker plays that don't leave a lot of your money on the line overnight. So that's kind of what you're looking for. But big tech earnings is over for this quarter, and I think we move into some of the smaller companies. This week, I know we have like PayPal, Uber, and companies like that. So there's still some good earnings reports coming out this week. They're just not big tech related. So let's take a look at Snow. I've been watching this chart a little bit more than normal over the last few weeks. So I'm going to take the lines off just so I can kind of give you a little bit of analysis on what has my attention on Snow. So here we have one of my favorite charts going into next week. This is the Snow daily chart. I've been watching this over the last week or so, maybe 2 weeks. a little bit more than normal. I'm going to take all the lines off in a second. So the first thing that happened that had my attention was it holding this 134, 135 support zone. As you can see over the last few months, this level has been very tricky for snow. It refuses to go under, and when it does, it doesn't stay there long. What happened after the bounce? Snow actually bounced from the 134 zone to a high of 161 in 3 days, 3 trading days. So y'all know this is one of my favorite candles right here. Anytime we get a really strong candle off of support that breaks through 3 of the EMAs or even 4 of the EMAs, in this case, it broke through 3 of them. It had good volume. It was a strong sign of buyers stepping in to push snow up off of this 134, 135 support zone. So it closed above there. Then the next day we got a gap up. We got the gap close. I mean, snow is just moving. Beautiful movement on that Thursday. So then next day, it's just moving with the market at this point. Tech was running. All of tech was running, so snow ran too. It pulled back to test that 9 EMA. So we got a pullback, tested the 9, and gave confirmation that we're continuing up. So all of that being said, all of that alone was a beautiful move. So it went from about 134 to 178 over just like 2 weeks of trading. So massive move. That's not even my favorite part. My favorite part is when you zoom out of the snow chart. So the yellow line is our 200 EMA, strong bearish sign that we've been under the 200 EMA for this long. But if you pay attention, the last time we closed above the 200 EMA on the daily was February of 2022, and we only closed above for a few days. So snow really hasn't been above that 200 EMA on the daily since about early January of 2022. So with that being said, going back to current price, we gapped up above that 200 EMA on Thursday. We gapped up and snow held that level, and it gave us the high that I just mentioned of 178. That's all cool and great. Friday came. Snow gave a massive rejection of that 200 EMA. So we haven't been above the 200 since February of last year. We broke above that 200 EMA and we could not hold. That is a strong bearish sign. Not only do we get a strong bearish sign, that sign also leads us back to, it gives us some kind of reversal. So snow should, in most cases, be a safe play for a small downside. Maybe if it can go, so it closed at 163.29 was the close. The 9 EMA on the daily is at about 159-ish. So at a minimum, I would expect snow to go back and test that 9 EMA on the daily. Another confirmation on a bearish sign for this is that not only did we get a rejection of the 200 EMA on the daily, we also closed below the current support level. So huge bearish sign for snow. I'm short-term bearish snow. It's something that you'll have to play out, just like I said earlier about SPY, going to that 9 EMA and using it as a launch pad. Could it go to the 9, bounce, and then break that 200 for good? That's a really strong possibility. However, you have to wait. You have to be patient on this. Snow is an awesome scalp and an awesome day trade, but always go back to your daily charts near the end of the day to see how our daily candles are setting up. Also on snow, just real quick on the weekly chart. The weekly chart is in a position where it rejected. So that rejection of the 200 EMA on the daily was also a rejection of the 50 EMA on a weekly. Originally, when I saw this weekly chart, I thought it was possibly a clean double bottom setting up. And it still could be. It's very well still representing a double bottom. However, it has to close above this 50 EMA in the near future, because if it doesn't close above and it continues to reject, it's going to give us a lower high. So we have a high. A lower high is a bearish sign that may push us lower. So if we're not actually getting that double bottom confirmation, you have to wait. You have to be patient on this, because if you zoom out, this could actually be some type of bear flag, bearish pennant, or something like that. Let's take a quick look at AMD. AMD is another company. They had earnings last week. Huge gap up and huge continuation after earnings. I mean, AMD moved like a train. AMD ran right through that 200 EMA. AMD is catching some resistance at that $88 range. So that's something to watch. Our level to watch on AMD for more upside is going to be that $88 to $89 continuation. You want to watch that for the upside, and then the downside, you want to watch the $85 range. You may be able to go to a 1 hour chart. So let's check out a 1 hour to see if there's a little bit quicker confirmation. And you can easily see here on this 1 hour that once we break 85.28, let's say $85 for a clear downside, especially if we can get this 9 EMA to cross the 21 EMA, that'll give us more indication that we're going to continue down some, but you do want to wait for confirmation. AMD has been moving like a train, and you don't want to short strength too quickly. This isn't the same market that we had in 2022 where we could just buy puts and they would eventually pay, because the puts have been getting chewed up this year. So wait for confirmation on your puts for AMD, but a put from 85 down to $82, that's a good trade on AMD if you're looking for a day trade. If you watch the 50 on a 1 hour, if we can break through below this 50, then you can continue down to $80. We do have that open gap from earnings. It's at about $75. Definitely keep that on your radar. Set some alerts along the way, but don't get too caught up on trying to short it from here. It did give us a reversal candle because it's rejecting that $88 range. Let's see if we can get it below 85, and then we can play level by level. So I'm looking at NVIDIA to see if it gives a similar story to AMD. So looking at the 1 hour, the level that NVIDIA needs to break is 210.71-ish. So once it can hold below that, then some puts would definitely work down to the next level, the next EMA. AMD and NVIDIA definitely look like they want to take a break. Just make sure you get confirmation for the break before you jump all in. And for NVIDIA, I know AMD had to get back above 88. NVIDIA really needs to hold above 217, the 217 to 219 range, and then it can continue up to its next level. But these things are on fire. They've been on fire. So let's check the RSI. RSI really isn't even that bad on the daily. Or I'm sorry. The RSI really isn't even that bad on the 1 hour chart. It's a little bit hot on the daily, so we could get a little bit of a pullback. The RSI is only a little bit hot on the daily. I could see a little bit of a pullback, but I'm just not sold on the market tanking right now. Not yet. So just checking AMD as well. Both have high RSIs. They could cool down some, but that doesn't necessarily mean that we're going to tank. That means we may get a couple days of pullback. We could get some sideways action. Keep in mind that just because your RSI is above 70, it does not mean that the market is going to just completely bust down. So let's take a look at Kroger. The community requested this one, so let's take a look. I have traded Kroger before, but it was definitely because of earnings. I don't normally trade it. It's a slower ticker, which doesn't really mean anything. If I'm looking for something to scalp on a normal day, Kroger doesn't really give the move that I need for what I'm looking for, but it's definitely a really good swing trade idea. It looks like they have earnings on March 1st, I think. Yeah, it looks like Kroger has earnings on March 1st. The main thing I see just looking at this chart is that we're at a strong support level that we've struggled with for a very long time. Even though we had a false breakout here, it definitely bounced back above. So if you're trying to go long Kroger calls, you might want to wait for some type of continuation, candle, bounce, or something to let us know that we are bouncing. Or if you're looking for puts, you want to wait for some type of reversal candle that's going to break this support and let us know that we're going lower right now. So that level is at about $44. Let's say if we're looking for some more downside, our first level would be about 43, which like is really not a lot. And then maybe like $42 to the downside. But you definitely want confirmation when something has set at the same level for such a long time. Let's check out the 1 hour chart just to see if we can get a different viewpoint of it. Yeah, same thing. A lot of chop between these levels. Yeah, so looking at the 1 hour, either you can try to play the range, playing from here to there, but sometimes that gets a little bit tricky if you do get a breakout or a breakdown. So I would just set some alerts at the high and low of this range and kind of wait for the breakout. Usually massive consolidation like this, what we call chop, it leads to some sort of really good breakout. So it might be worthwhile to just set some alerts at the high and the low of the range and then play that breakout. All right, so let's check out CVS. This is a CVS daily. Someone in the community requested this one, and I believe CVS has earnings this week. Yep, on Wednesday. Oh, I think they have earnings on Wednesday. So same thing with CVS. It is near a strong level. You can see the friction here. You can see the friction there. And then if you go all the way back to 2021, you can see there's a lot of chop in this zone. You want to make sure that it gets out of the zone. I don't have any type of fundamental outlook for this. I know a lot of people are looking for the earnings play or whatever. I can't help you because I don't know. I can't be like, oh, well, healthcare has been booming or CVS. No, I can't help you. But I can look at the chart. I will say, as always, swinging earnings is risky. CVS really has been on a downtrend since early December. And let's look at a weekly because I'm sure this just looked like weekly chop. Yeah, so let's look at a weekly. And what I can see really clearly on a weekly is that trend line there is giving CVS a lot of problems. Also, I'm glad we switched to a weekly because you can see on a weekly that CVS is up against that 200 EMA on a weekly. That would be a really big deal if it did break and hold below that. You can look at this playing into earnings, but you want to wait up until, I guess if it has earnings on Wednesday. I don't have any fundamental like help with actually like, oh, is it going to run or fall for earnings? I don't know. I just analyze the charts before and then I'll analyze it again after. If for any reason CVS does break and hold below this 200 EMA this week, that would be something key to look for. I do see on the weekly we have low, lower low, and lower low, and sometimes lower lows into support breakdown. So actually, this is kind of a good chart to keep an eye on over the next few weeks. CVS is another ticker that's really good for swing trades. So definitely looking to see if we can get some type of bounce in this range, or if we continue lower, we might go straight through that weekly 200 EMA. Real quick look at Apple. Apple had an extremely strong earnings. And not only did it have a strong earnings, it closed just as strong. So a lot of times you'll hear me say, Apple is the best indicator for SPY. SPY would not fall until SPY would not fall as long as Apple was running on Friday. And Apple just ran and it just didn't stop. However, looking at this level, these levels were plotted before the market on Friday. And as you can see, that 157.35 resistance held its weight. It held its weight. It's previous from October of last year. It had issues all the way as far as August, July last year, so last summer. So definitely have an alert at 157.35 on Apple for continuation to the upside. In any case that we continue to get any type of reversal candles or anything like that, definitely look for some downside to Apple. And I also wanted to point out on a 1 hour, a lot of times people are quick to buy puts. People are quick to buy puts on these stocks as they reject that level. But even though it rejected, so from 157 to 154 was a great day trade if you did trade it. However, look at how it's setting up at our 9 EMA. This could be the most beautiful bull flag that we see. It's just something that you have to keep an eye on.